All right, everybody in the Code 3 community, welcome back. In this video, we're going to talk about tax. I know, super exciting. Generally, people hate tax, but after watching this video, you may decide you don't mind it so bad. We're going to talk about ways you can dramatically reduce your tax bill and get the government to pay for a portion of your performing assets so that you can increase your wealth building abilities while slashing your taxes. Essentially, that'll increase your wealth building velocity. So got a presentation put together for that. Let me share my screen here. For those who've watched our videos before, you've seen this, but if you have not and you wonder why there's pictures of SWAT teams and so forth on here, just send an email to swat@code3assets.com. Our team will send you over a series of 3 reports, one of which is pictured over there. SWAT lessons learned is what it's called. And there's 2 subsequent reports after that, offensive and defensive strategies. My SWAT experience taught me and how we apply that to business and in life. And you'll see how those communities think and behave and how we've adapted that into some of our life. And if anything else, it'd be kind of an interesting read for you. A lot of people don't really see kind of behind the curtains on that and see how that can apply to life. Maybe it'll help you, or maybe it won't. But absolutely free. Just send an email to swat@code3assets.com. The team will send those reports over to you. No obligation to that at all. So you'll see in those reports that everything that happens there is made up of tactics, techniques, and procedures. The tactic is something that we're trying to accomplish. The technique is what we're doing to accomplish it. And a procedure is something that um, increases the efficiency of the technique, or makes it a little better, or hones a skill or something like this, makes everything else work a little bit more smoothly, a little bit more effectively. So here we're going to talk about, are the procedures going to be discovering or having at least a basic understanding of how the government can pay for portions of your investments and increase your cash flow, reduce your tax bills, so that we can ultimately slash taxes with the idea of accomplishing our tactic and our mission statement of protecting generational freedom. We've done other videos in the past. You may wonder, why am I referencing freedom and investments? Go back and watch those videos and about the why behind what we're doing, and that'll make some more sense. But I don't want to get too far into the weeds on that here, because some folks have already watched that, but certainly those videos are there, and we're happy to have you take a look at them. Couple disclaimers: we're not tax and legal professionals. We have some great ones on our team, so if you need one on yours and you're not sure who to get a hold of, or maybe your accountants or so forth say you can't do this or don't know how to do this, just send us an email. Send our team an email. Just email team@code3assets.com. Say you'd like to have a referral to a CPA or a asset protection attorney or estate planning attorney or whatever you want, and we will send those referrals over to you. We get absolutely nothing out of that other than goodwill. We're just happy to help you guys out and help out the folks that are on our team as providers. So the bullseye target here, if you've watched our videos in the past, you'll see that this video focuses on how we're going to accomplish what we're going to accomplish. The why is obviously the mission in the center. When, again, we've done other videos on that. And the what is when we get into particular investments. What are we going to acquire, and kind of at the tactical level, how are we going to get it done? But please, with the disclaimers there, you just make sure you're checking with your tax and legal professionals so that you are well advised no matter what investment decision you're going to make. We're just here trying to give ideas and information, and try to provide you some information that may be able to help. So regarding taxes, you are a partner with the government. We all are. If we're working and we're making money, or investing and making money, we are a partner, and we have a choice in how we behave there. You can be a silent partner and pay a high amount of tax, and the government will cage up a certain portion of your earnings and do as they see fit with them. Well, Tom Wheelwright, who is Robert Kiyosaki's personal CPA and a rich dad advisor on tax, he will tell you, if you want to change your tax, change your facts. I've had the privilege of being around Tom a couple different times. He's just an outstanding teacher. I've actually been a part of his Wealth Ability University program for a couple, 2 or 3 years. A little bit expensive, but it is great. I mean, the information you get out of there allows you to have conversations with your tax providers and so forth. It kind of puts you on a little more of an even playing field so that you can have good discussion and ask good questions. Because if you want to have good answers, you have to ask great questions. And I didn't have that before. I used to ask a lot of questions, but I didn't really know enough to push back or dig a little deeper into the question or the conversation in pursuit of the result I was after. So He has a great program, just an awesome human being. I highly recommend you read his book. I've referred this book to a few folks, or a number of folks actually, and they've all had rave reviews. So it's an easy read. And we did tell you in other videos that we would be telling folks in our community things they could do to take action to better their situation. This is a very easy one. I mean, for probably 15 or 20 bucks, you could have this book in a couple days. It's even on audiobook, and it can really alter how you look at so many things, from planning for your children's education, to investments, to businesses, to all sorts of things. So it's just an outstanding book. The other option you have is understanding that, as Tom says, the tax law is a series of incentives to get people to do what the government wants done. So if you do what they want done, you can suddenly become an active partner, and all of a sudden more money is freed up out of that jail for you to do as you see fit. So we're going to go through an example kind of illustrating that here. Let's say we have an investor or a business owner or whatever that has $100,000 in income. Maybe they're getting it out of rentals, or they got a piece of machinery that's producing income, passive income. So we're talking about passive income, capital gains, things like that. Now, there are some other ways this can be done with other incomes. It depends on what type of investment you're targeting. Oil and gas is dramatically different than real estate. Some things can offset W-2 income. A lot of things can't. So that's where you need to be well advised. But for this example, let's say we have passive income, or we have a capital gain. So passive income being something that we're getting off investments, cash flow, we're not actually working for it. And capital gain being maybe we sold that dump truck pictured there, and now we have this capital event. And let's say that was $100,000. So we move $100,000 onto the asset column of our balance sheet. And if we make good money, we're in a high tax bracket. Uncle Sam tells us that we owe them $40,000 in tax. So that's a liability, and it gives us a net of $60,000. So that one's pretty simple. If you do nothing, if you just hold on to the cash, if off this passive income or this capital gain, you're going to end up with $60,000, and that's it. And Uncle Sam will go do whatever he or she sees fit with the other $40,000. So let's take a look at another option. Same $100,000 in passive income or capital gain. Let's say we sell it, or we get that passive income over to our balance sheet. We end up with $100,000 on the asset side of our balance sheet. And immediately, again, it's married with a $40,000 liability. So again, we're assuming that we're in a 40% tax bracket here. But here we're going to illustrate a little different option for you. Let's say you take $60,000, which is the cash that is yours after the government gets their 40,000, because that 40,000 is a liability. It is spoken for. If you do nothing with it, you are going to write a tax check to the government. So it is not yours anymore. However, if we take the $60,000 and we acquire a certain type of asset, the government then will bring in the other $40,000 through bonus depreciation, which is again present this year. This is being recorded in 2022. So here we can end up with a $100,000 cash flowing asset, depending on what the investment is. But there's a number of them out there. It's never been easier than it is since 2017, I believe, is when they passed the Tax Act under then President Trump, and it allowed bonus depreciation to be applicable on so many things. So in other words, you can write off, take all that depreciation in year one. So here you brought your 60,000 out of the 100, and now the government has partnered with you because you're stimulating economic activity, whatever the case may be. You're not just sitting on the cash. You're contributing back to a growing economy. So they say, okay, we'll partner with you and we'll contribute this 40,000 back. So you can view it as you get the 100,000 back, or the 40,000 back, or you can just view it as they actually contributed on your behalf. And I believe them contributing on your behalf is probably more accurate, because if you did nothing, you do owe it to them. Just because you haven't wrote the check to them yet doesn't mean that it's not on their receivables and your payables. So in this situation, let's say we acquire $100,000 worth of cash flowing ATMs. Just bringing that up because we have a deal like that going right now. So let's say you acquire $100,000 in cash flowing ATMs. That's mailbox money. It's passive income. And what that does is it kicks your $100,000 worth of assets back to that side of your balance sheet. So on the left side of the screen, you have $60,000 net, and on the right side we're back to 100,000 because we went out and did what the government wanted us to do. So they decided to be an active partner with us instead of making us a silent partner. Now I want to be clear, this is not the same thing as going out and just spending a dollar to save 40 cents. uh, get in conversations with people all the time that they'll just go out and buy a liability, buy something that's not going to increase their income. As Robert Kiyosaki says, an asset is something that puts a dollar into your pocket, and a liability is something that takes a dollar out of your pocket. And some folks will just go out and buy a liability. It simply took $40 out of their pocket, but it puts nothing back. And they do it only to save the tax. And then maybe that's even a depreciable or a devaluing liability. It's something that's going down in value, like a car or a four-wheeler or a boat or whatever the case may be. Those aren't probably things you could buy and offset taxes, but you kind of get the point. Um, you go out and buy new tires for a tractor that you don't even use anymore because the tractor don't run or something like this. So again, what we illustrated here is not the same thing as spending a dollar to save 40 cents. That doesn't make any sense. Here, we spent the 60 cents. The government married up with us on the 40 cents on the dollar, and we put that dollar back into the economy, back to work. And now we've got passive income coming to us. So that's one way you can get it done. We have a deal like that right now. We're not pushing that deal to you in this video. That's not the point. But I just share that to show you that it's easily doable. There's all sorts of deals like this out there. In 2022 is a great year to be getting this done because the bonus depreciation is still readily available to so many things, and that's going to start phasing out. So what can you do now? As you see in our SWOT reports, if you've already got those, or if you're going to get them after this video, you'll see that we talk about what's important now using the WIN acronym. Just see for yourself. Send an email to atm@code3assets.com. We'll send you a one-sheet summary detailing exactly what we're talking about with a real world example. You'll be able to see the math and how this works if you have a tax burden or you don't, and if the government partners with you or they don't, and what it does to your return. So we'll send you a one sheet summary on that. That is for accredited investors only, that particular deal. And if you've watched our videos on syndications, you'll understand what we're talking about there. So just go check those videos out. We actually explain how syndications work and what an accredited investor is. But the point here is we can send you a one sheet summary over and you will see real world mathematical examples of how this applies. So I hope everybody found this beneficial, and we'll catch you on the next video.